Hi everyone, this is Rob Roy and welcome to this week's Elliott Wave Options U.S. Market Update. Well, Goldilocks sure arrived right on time, didn't she? Everything that we talked about as far as finding the extension of that zigzag pattern, the extension on the interest rates, all came to fruition. And then we got the bounce. We got the exact bounce we were looking for. In fact, when I show you the chart, you're going to see that we're at a point of indecision within this bounce, not to mention the fact that it's been a pretty vertical bounce. So let's take a look at the charts and see if we can figure out where we go from here. So as I mentioned, we did get the bounce. I'm sure everybody is well aware of that. And look at the vertical nature of the bounce. If you've heard any of my recordings, you know that I don't like from a directional standpoint, for the directional moves to hold, for them to be too vertical, because what tends to happen is what goes straight up tends to come straight back down. So I like it when we get a 45-degree angle move. Those moves tend to hold a little better. But we did get the correction back up to retrace the entire C wave of the zigzag pattern, which is exactly what is supposed to happen. But now let's figure out, if we can, what's likely to happen from here. So there we had our A and B wave of our zigzag pattern, and then we drew the C wave extension. From that, right to the 100% level, the market went, hit it dead on, and then we've moved vertically from there. But note the key, and I'll take this back off now and then label it because that's important for where we go from here. The zigzag pattern, that's the A. There's the B wave correction, so we had an impulse A to the downside, the B wave correction, you're aware of this already, and then the C wave extension, which did exactly what it was supposed to do. But what you may or may not know is when a zigzag pattern completes, it's supposed to retrace the previous impulse move. That's as long as you don't have an extended wave C. So we didn't. It went 100%. It wasn't extended, so it did just exactly what it was supposed to. And so with Elliott wave rules, you are expected to come back and retrace that impulse, meaning we retrace the entire C impulse. We go back to where the B was. We did. We hit that today. That's why I wanted to come and record this today. So where do we go from here? Well, that remains to be seen. Not as clear cut. We kind of need the market to give us an idea of where we go from here. If we look at the moving averages, there's that 10-day moving average that we talk about, and you can see that we do have a bit of separation, even though the market did finish off the highs today, but there's still a little bit of separation between where we are and the 10-day moving average. I wouldn't expect too big of an upward move tomorrow, not to get too far away from the 10-day move. It doesn't mean we couldn't finish to the upside tomorrow. Possibly we retrace the entire zigzag pattern. That wouldn't be out of the realm of possibility either. Moving back up to that previous 3. So that could happen, or we could at least pause, if not retrace back down a bit to that 10-day moving average. So when you get the separation, what usually happens is either the market reverses and comes back down, or the market goes sideways and gives that 10-day moving average an opportunity to catch up. So it catches up to where the market is. So either those two things could happen, or this could all fall apart. We had the zigzag completed, then we had the correction back to the previous B, and all that's exactly what's supposed to happen. So once that's occurred, we could start a new impulse pattern to the downside. So that's why I'm saying that it's a little cloudier as to where things go from here. So the question I would ask, did Goldilocks run too far, too fast? That would be the commentary that I would make with this, the vertical nature of the move. So that makes me a little bit nervous of a potential move back to the downside, more than just the 10-day moving average. That would be nervous if you're long the market. Taking a look at the VIX, now that does give us a little bit of hope here because as you can see from the chart of the VIX, we're still well above that 12 level. So we still have a little bit of juice left if we wanted to make an upward breakout. Now here's something that's pretty interesting. These triangles work. It doesn't matter what the chart is. The triangles are still triangles and they mean breakouts. And we're forming a bit of a symmetrical triangle on the VIX, which means that we're likely to get some sort of a breakout move on the VIX. So for us to get a downward breakout on the VIX, that would imply a big move to the upside. Now, could that happen? Yeah, I think it's a little less likely with what we just went through, but certainly when you see a triangle, you don't try to pick a direction, because as soon as you try to pick a direction on the triangle, the market will make a fool out of you and go the other way, I guarantee you. So let the market tell us which way it's going to break. But we can still think about it, as long as we don't trade by what we think. We trade by the charts and what they show. And that would be that if you wanted to put some sort of a strangle type position on the market, now wouldn't be that bad of an opportunity to do that, because according to what the VIX is showing us, whatever happens, whether the VIX breaks to the upside and we get a significant move lower, or the VIX breaks to the downside and we get a significant move higher, that word significant was in both of those, and so it should be a pretty decent move in either direction. So looking at, we already have a strangle on for our subscribers, so we're good to go there. But looking at TBT, just wanted to highlight this because it's pretty fascinating, this Fibonacci Elliott wave stuff. Clearly you can see the zigzag here. We've already talked about it last week, so don't need to retrace the whole thing. But what I did want to do is put the extensions on there and show you how fascinating it is that the way interest rates were going down, and then all of a sudden they run right into that 100% extension, and look how they've just gone sideways. So the market comes down, interest rates run all the way down, they hit that 100% extension, and then it's like boom, they just landed on the brick wall. There's nowhere to go. So sideways there, consolidating, just fascinating to me. Down, 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 boom, sideways ever since we hit that 100% extension. Could interest rates go lower? Sure, they could. And if the market begins to go down, we could head back down and possibly have an extended C wave there. So the difference now between why this hasn't retraced back up is because that was an extended C wave. So did a little different plan there than what occurred with the actual market. So keep a close eye on things over the next couple of trading days. A little less clear where things are going to go. That's when a strangle works pretty well. Hope you've had a great week. Look forward to talking to you again next week. Take care, everybody.